All right, everybody. Stocks by the numbers. Welcome back. Wanted to take a quick look here at ACM Research Incorporated, ticker symbol ACMR, listed here on the Nasdaq. This is a company that apparently does like wet wafer sealing, and it says here they can clean particles. It supplies process solutions that semiconductor manufacturers can use in numerous manufacturing steps to remove particles, contaminants, and other random defects. The company, in my opinion, actually looks really good in the numbers and has been growing nicely over the quarters and over the years. The only issue I have is that the bulk of their revenue is currently coming from China. So I'm kind of curious to see if we may potentially have some sort of change in this company's actual business operations inside of the next, I'd say, like 12 months from today. Because, of course, this is an election year, so we know that anything can happen. But we also know that, in my opinion, the fundamentals speak loudly. So let's take a look at the numbers here. Stock right now, 22.28, down a third of a point, a little over 1.5% here on the day. We had a 52-week high, 34.40 recently. The company came out, reported earnings. As you see, really nice beat on the top and bottom line. And then last quarter here, about 2 weeks ago, another really nice beat on the top and bottom line. Market cap right now, 1.33 billion with a PE of 17.25. We have a high beta, but again, the company, in my opinion, looks pretty good in the fundamentals. Solid beats here, basically just really pulling away and separating themselves from the analyst pack, so to speak, coming in well above these expectations on the EPS side. Look at this revenue growth here, 100 million up to 150 million there in 2020. Now they're doing that per quarter, right? Up to over $250 million, almost 400 million, and now over $500 million as of 2023. And we can see that technically the net margin percentage has been bouncing around, but sitting here at about 14%. In my eyes, that's not too bad. We switch over quarterly, we can see we were down here in the 70s, and then we recently basically doubled that, and we've been holding that level. So we've been above that revenue level that the company was at Q1 of 23. We've been above double that now for the last 4 quarters in a row. As you see, forecast giving it a strong buy. Average price target 37.79, as low as 34, as high as 40. 7 analysts covering the stock, all giving it a strong buy. And the reason why, in my opinion, is the consistency. That's what we always talk about, right? This company beating on the EPS side the last 8 quarters in a row, and look at how they're beating these estimates. We switch over annually, they haven't missed since 2017. Quarterly, we can see we had 0.25% miss back there in Q3 of 23, before and since, doing phenomenally well, coming in above expectations. Switch over annually, company hasn't missed a mark, going all the way back to 2017, with 2024 revenue expected to jump from this low mid 500 million range up to almost 700 million, and then getting above 800 million, and then above 1 billion there going into 26 and 27. So just based off of that, in my opinion, I would say the company is undervalued, not only on based on the amount of revenue that they're bringing in, but at how consistent they're growing and beating estimates, and the fact, again, 1.33 billion with the 17 PE. I'm sure if we compare it to its peers, it's going to look significantly undervalued. But let's check some numbers real quick. You can see, look at the growth here. Again, this is the semi-critical cleaning equipment here. They call it the wafer cleaning. And you can see tens of millions, hundreds of millions, over 400 million, in 2023. And the rest of their segments climbing nicely as well over the years. But you can see right here that, again, basically, what is that? 97, 99% basically of their revenue coming in is straight out of China. But it does consistently keep growing, and it really doesn't seem to be an issue right now. And I'm technically not trying to raise an issue, but I did just want to bring it to everyone's attention. The debt has increased lately. However, it has pushed the company again to that second tier level of revenue. Again, they were bringing in 70, 75 million. Now all of a sudden they're bringing in 140, 150 million a quarter. So obviously they're utilizing this debt correctly. The cash was on the way down here from about $250 million down to 183 million. Now, as of last quarter, back up to 212 million. The free cash flow technically is negative, but it has been climbing for the last couple of quarters. We have assets outweighing liabilities in both the short and long term. We switch over here and we can see we were in the hundreds of millions. We dropped down to 74 here in Q1, and then we catapulted right back up here, 168, 170. And it seems like the cost of goods, in my opinion, staying in line. Gross profit basically holding steady here, high tens of millions. Operating expenses jumped from the mid-high 30 millions up to the mid-high 50 millions. And we can see that the operating income took a couple of millions of a hit, but still positive. Switching over to the balance sheet, we can see that assets for the most part consistently increasing, and yes, along with liabilities, but total assets minus total liabilities yields total equity, and you can see we've gone from 770 million up to 870, 9.25, almost 1 billion as of last quarter, with the debt sitting here at about 120 million. So again, if we look at quote unquote like fair value of this company, the way I do it anyway, we can say that we have 960 million in equity minus 120 million in debt. That's about 840 million, and we brought in 550, so that would bring us to about 1.4 billion. And that's exactly where the company is trading right now. But in my opinion, that is actual like fair value of the business. That's how I personally would look at this. So even if we give this a 2x multiplier, then obviously we're looking at a $45 stock. So if you guys are bullish on this one, in my opinion, I completely agree and can appreciate where you're coming from. The PE down slightly, but up from where it was, but it's basically middle of the road here at 17. Price to sales 2 1/3. That's basically middle of the road. Cash flow is negative, right? So we don't have a price to cash flow ratio. We're trading less than 2 times book, and technically that was higher than where we were, but we were up to 2 1/4, and that's what I mean. In my opinion, we should be much higher from here. The enterprise value, what someone else would be willing to pay for it, as you see, about 1.4 billion. So, you know, some of those calculations do seem to be in line with how a lot of other people feel about it. Our return percentages are up, and up. Our gross margin percentage back up to almost, excuse me, to almost 52%. And it does look like we kind of have these little ups and downs here quarter over quarter, but back above 50, in my opinion, good sign. Operating margin 16.5%. Basically kind of in line with the average, but up a couple of percentage points here quarter over quarter. So basically in line, holding stable, right? That's what we like to see, in my opinion. Either consistent increases or consistent stability, at least stay in that range. EBITDA, as we see, got up above 20 a couple of times, was down here at 14, now sitting here at about 18.25%, so that's basically middle of the road. Same thing with the net margin, right? We dropped down to high single digits, but we got up as high as about double that at 18.5%. Now we're sitting here at about 11.5%. So essentially, you know, kind of middle of the road, but also we did see a slight increase there quarter over quarter. Inventory turnover was heading down to sub 0.6. Back up, back down to 0.59, now 0.6, 0.61. Asset turnover was pulling back, 0.46 down to 0.35, and now it's slowly been climbing up the last couple of quarters. The debt, again, has increased, so our debt ratios are slightly up. But again, it's the consistency here, and looking at all of these quarters and all of these years to go back and say, yeah, the company really only missed, you know, literally a handful of times. In my opinion, that's a pretty decent stock to own. Let's check some of the numbers here. Price target maintained 34 by Needham. Net income revenue rise. Earnings revenue surpass estimates. Much more profitable. Back's fiscal year 24 revenue 650 to 725, right? So again, if we trade it based off future growth, right, instead of that 550 million they did in 23, which when I did the fair value brought us to about 1.4 billion. Now if we use the number of about 700 million, that would be about 150 million more, which would bring us from 1.4 up to about 155, potentially 1.6. So conservatively, in my eyes, I think we can easily see about 10-15% from this level. And yep, launch their results. Frame wafer cleaning tool. In my opinion, this is a very interesting business, and the rate at which they're growing, again, even if it is just specifically for the Chinese market, it does seem to be growing nicely. And then, of course, if they expand outside of that territory as well, I'm sure the business is going to grow even nicer. RSI has been in a downtrend, right? If we look here, we could make the argument that we're potentially kind of in this descending wedge over about the last 3 or 4 months. So we could maybe be getting ready to pop out. We could see a low maybe of about 21 1/3. Bottom of this trend line here, we could see high 20s, and you can see that that is essentially right with the 200-day moving average here of 2070. So we can potentially continue to step down, hit that moving average, approach the apex, and then bounce and climb back up to 25 and then potentially the high 20s, right? If we come down here, you can see bottom here about 2060, right, over the next week or two. 200-day moving average, 2070. MACD basically pulling back with the stock, kind of staying in this wedge. In my opinion, I would honestly be a buyer here, and of course, piecing your way in from 22 down to 21, 20, in my eyes, is the best way to do it. RSI on the weekly, essentially middle of the road. And we can see that it bounced nicely off of this 200-day on the weekly, so we can potentially retest. It's 21 1/3 over here as well on the weekly, so that may be potentially the low of the lows incoming. But in my opinion, I'd say it's worth risking 1 to 2 points drop to potentially see, you know, like a 20% run from here. MACD recently crossed to the downside, but was on the up and up for almost a year and a half straight, so chances are, in my opinion, it's going to turn around. ACM Research Incorporated, ACMR, here on the NASDAQ, in my eyes, looking pretty good. Could definitely be a good long-term player, especially if you pick your spots like this and add and piece your way in on these dips. Chances are, you know, long-term price target, they're looking for what, 35, 37. In my opinion, I'd agree with that. And even longer term out, realistically, I think personally this stock should be worth double value right now, and we could be looking at a $40+ stock, in my opinion. Now I'm going to end it there. Once again, Stocks by the Numbers, thanks for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel, and of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. More importantly, moving forward, like I always say, I understand markets are rocky and volatile and uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thanks for stopping by. Have a good day, guys.